Welcome back. Hope you're having a fantastic day. We are going to take a look at the markets, including Bitcoin, and see what's going on. We have a bit of a down day today. Markets have been up all week. Well, today's only Wednesday, but yes, markets have been up all week. And right now, the Dow is down about half a percent. S&P is down almost 1%. NASDAQ is leading, down by 1.36. And the news today is obviously the bounce yesterday was on potentially good news about ceasefire talks, things like that. Those talks have fallen through, and Russia seems to be escalating the attacks in Ukraine. So markets are looking at the reverse. And right now, the biggest threat that the markets are looking at right now is the Fed. Investors say the biggest threat to the markets is the Fed making a policy mistake. That's number one. The other biggest risk that the market's facing is inflation. Third is the escalation and potential aggression of Russia. China relations are fourth, and resurgence of COVID is in last place. Now, resurgence of COVID happening in China and Australia and Europe is obviously weighing on supply chains, which is affecting inflation overall. And then, of course, the Fed is the biggest issue that everybody's talking about right now in terms of them trying to create some sort of a soft landing for the economy. And GDP came in below expectations for the previous month. So now it's looking like the Fed is going to be tightening into potentially a slowing economy. So stagflation is something you're going to start to hear a lot of economists and investors and analysts talk about as we continue to move forward. However, this is the end of the month, which is the end of the first quarter. So a lot of rebalancing going on, a lot of options expiry going on, things like that. So there's a lot to watch out for in the markets over the next today and tomorrow as we close out the month and the quarter. And Bitcoin right now is working out this little area. Again, there was a lot of buying pressure from Michael Saylor, buying a couple $100 million worth of Bitcoin. He borrowed on his existing holdings using one of the Bitcoin lending platforms. I can't remember which one it was called, but there's an article on that. It was a traditional DeFi platform that's been created that lends on crypto assets, and we'll take a look at that and see if we can look at the article on that one again in terms of who that was. Silvergate, that's right. So Silvergate is the one that issued that Bitcoin collateralized loan, and they issued $205 million to MicroStrategy, allowing the company to buy more Bitcoin. The interest-only loan term is secured by Bitcoin held in MicroStrategy's collateral account. In addition to allowing the company to purchase more Bitcoins, the loan may be used to pay expenses related to the loan transaction for general corporate purposes, according to a Tuesday company announcement. The loan was made under Silvergate Exchange Network Leverage Program. So interesting play, considering that they've already issued debt to buy Bitcoin in the first place. They issued commercial paper, borrowed money to buy Bitcoin. Now they are borrowing money on the Bitcoin that they borrowed money to buy. So there is a little bit of a lesson there in terms of leverage and how leverage works. And when you get issues of sell-offs and price declination, that's when things can happen. So it'll be interesting to watch and see how this works out. As long as price goes up, you're in good shape. But when price goes down, that's when loans get called, pressure is applied, and interesting things happen. So what are we looking at here? Right now, we see this pattern developing in Bitcoin. And what I'm anticipating is a potential drop of maybe in the neighborhood of 20 to 23% in Bitcoin here over the next few days, coming into the weekend, into next week. And why do I say that? This is on the hourly. This is Bitcoin on the hourly. If you zoom out, we've seen this pattern play out multiple times here in recent history in terms of the Bitcoin consolidation pumps and drops. So the first one here was about, this was back in January, is about 22%. Then there was another one in this consolidation right here in February. This drop here was 23%. Then this consolidation here. So these consolidations here and here look a lot like what's happening right now after a run up This one wasn't as bad. This was about a 17% drop. So that sounds like a lot, right? A 23% drop or 17% drop sounds pretty bad, but let's take a look at what it does. So 23% would put you around 36.7, around 37,000. 20% puts Bitcoin around 38,000, and 17% puts Bitcoin around 40,000. So those are some interesting levels to watch. And then when you look at some other things at play here, it kind of starts to line up. So we have been tracking this channel here, and I like to use the closes. We've tracked the wicks, we've tracked the closes, but we're going to take a look at the trend on the price action that's happening right here. There's the bottom trend of this line, and Bitcoin's been kind of bouncing along that trend there. And now we have an upper trend line developing. And again, I like to track the closes on the upper range. So going back to this close on the upper range of January 22nd, bottom range, and now this upper range here, which is also the 200-day moving average. When you put the moving averages on here, let's go ahead and take a look at that. That's the 200-day moving average right there. And then we have the 50 and the 100. Blue is the 100, green is the 50 down at the bottom of the channel. So if Bitcoin, and we've been tracking this, if Bitcoin were to drop to the bottom of the channel, that's about a 17% drop, puts Bitcoin around 40,000. So that's pretty reasonable for a pullback. It seems like a lot, it sounds like a lot, but when you look at this channel we're in, price can fluctuate in that channel, and that channel represents a 15 to 17% range for price action. So a pullback to 40,000 would be completely normal and expected. And when you look at price as it's been moving up, that bottom that we called back in January of $36,000 on the close, 35,536, 36. Then our next lower high was 37,000. Then there was a lower high put in at 37.7. So if it comes back and checks the bottom of this trend, this line right here, which probably will, it's not unreasonable to expect it to be around that 40,000 range. So as long as it continues to do that and continues to trend up, then we could have this rising floating channel here that price could continue to move forward. Now, a lot of this has been driven by short liquidations. A lot of this price action has been driven by the buying that's been happening between Michael Saylor, small buy of 200 million versus Do Kwon buying billions of dollars, and that's going to continue for a little while. That's been putting a lot of pressure on price as well. But as we see prices dropping, so why would it be dropping? Because what's happening is open interest is running right around, 13 to 17 billion dollars right now. So a lot of open interest here going long at this point right here. Some of it going short, but there's more longs on right now than shorts. So that's obviously going to create liquidations. And the last time we had open interest at that level was back here in December before this big fall right here. So the last time open interest was at the level we're at now was right around the end of December. Before that, cascade that ended up being a 35% drop. So not saying that that's going to happen, but a 20% drop, 15% drop, absolutely. With the open interest that we have right now, with the long positions on that could get liquidated, you could absolutely get a pullback at that level. Let's take a look at where we're at overall. So again, we've been monitoring the 200-day moving average. That's a big hurdle to get across. Until price gets above 200-day and closes above it and moves on, you can't expect a reversal of the trend. And let's take a look at where we stand on the Gaussian channel. So it's above the Gaussian on the daily, but the weekly is what really counts. And we've been looking at the midline of the Gaussian channel. Whatever price stayed below midline, it goes down to check the bottom. So here's some good news here, is that price has broken above the midline and closed above it, and then opened above it. So if price continues in that direction, it could bounce around in that upper range of the Gaussian channel, kind of like over here. This is the price that we're tracking. This was after March 2020 bottom where price broke up, just like we see right now. This candle here on April, this is actually April 27th, after that March 2020 bottom. Price broke up, closed above, and then had a candle open above it. And then it just continued on in the upper range of that Gaussian channel until it finally broke out, checked, and then moved on from there. So price could continue to do that. And that would be bouncing around in this mid to upper 40,000 range. The top of the channel is right around 53,000 right now, depending on where this plays out at. However long this plays out will determine where the upper line and the midline of that channel is. But right now, the midline's at 44.6. The upper line is at 53. And as we look at this on the retracement that we've been looking at on the Fibonacci's, the 0.5 is right at 51,000. The 618 is just above the top of that channel, and the 702 is in the upper range here. So what we've been looking for is that retracement to the 618 to determine if we're going to see more continuation as we go along. If you go back to 2017, 2018, Bitcoin did the same thing. Price broke out, closed above the midline of the channel, and then opened above it, then dropped, and then continued down from there. So not out of the woods yet. What you want to see, obviously, is continuation and breaking up out of that channel. This is Bitcoin on the weekly here. And in terms of where price could potentially go there. And let's get back on the hourly. And this is working across the board. Bitcoin, Ethereum, Avalanche had a nice little pump because of the Avalanche conference that's going on right now. Solana had a nice little pump here, Matic. So it looks good on the hourlies. And then when you drop out and you look at them on the dailies, you get a little bit different picture. Price is, having a nice little bounce here, but still well below the retracement levels that we're looking for on a lot of these coins, back to that 618, 702 level before rolling over, to potentially longer consolidation periods. And we'll just have to wait and see how the next few months play out. There's a lot of capital coming into the space, more and more adoption every single day in the space. So these are the things that we have to watch out for and kind of keep an eye on as price moves forward. But, you want to zoom out and look at these on the daily and on the weekly, especially if you're, doing swing trades and just kind of get a little bit perspective to the price. Bitcoin looks really good on the hourly. And then when you zoom out on the daily, you can clearly see this channel that it's in. And that's not a bad, price consolidation channel for Bitcoin to be in versus dropping, full on 85% back down to these cycle lows here, which, some people are still calling for that. Anything can happen, but there's so much interest in Bitcoin, especially Bitcoin right now. I think it'd be very hard for it to drop below some of these lows again, but you'll see some chatter out there that Bitcoin will never go below 45,000, never go below 40,000. If you believe price can go to 100, then you have to believe that price can go back down to 30 and check that range again. And as we saw in the March pandemic of 2020, the price hit 3,500, but that was before it ran up to 64,000, 65,000. So I think from a relative standpoint, price was previously at 19,000, basically 20,000, and it dropped 79% down to 3,500 in a panic. So let's say price hit 69,000 and dropped 70%. So that would put you around 18 or 20,000. So, that's probably the worst case scenario is about 18 to 20,000 in a complete panic cycle. But this 30,000 level has a lot of support. And again, we've talked about that before. I think a macro market structure support has been put in at that 30,000 level. It did not break below it back in the summer of 2021. So I don't expect it would do it again this time because it tested 33,000 over here and didn't crack. So it would take a serious panic situation, I think, or a really, really serious economic situation or something just structurally and fundamentally wrong with Bitcoin itself in order for it to break below those levels, because there's just so much interest in it. And we know now that it can hit that 69,000, 65, 69,000 level pretty easily. It ran up with these runs fairly quickly, and it pumps in these areas here pretty fast. So you have to believe that price can easily get back to 70 to 80,000 fairly easily here once we get through this economic environment we're in right now. And really the only thing that's really slowed things down has been the fact that we're facing inflation, slowing economy, the Fed's raising interest rates. We still have a lot of issues out there in the economy. And then of course, the issues we have with the war in Ukraine and potential escalation there. And as you can see, markets are knee-jerk reacting to any news, good or bad, due to the conflict over in Ukraine. So these are the things I'm looking at, and I will see you on the next video.